I stay in my lane generally, and I say you should buy Bitcoin. Don't sell your Bitcoin. Bitcoin's good. I like Bitcoin. It's an ethical commodity. Everything else in the what I'll say about everything else is the rest of the digital asset ecosystem is a bunch of good ideas with a lot of regulatory uncertainty and competitive uncertainty and technical uncertainty.
Wait a minute, everyone. Welcome to Bitcoinzilla, your platform for daily cryptocurrency analysis and news. Our mission is to keep it simple. Bitcoinzilla offers engaging information that is easy to understand. Our analysts keep their eyes on the latest news to provide valuable insights via email. Don't miss out on this opportunity. Join our community of 10,000 subscribers and experience the new edge with Bitcoinzilla. Subscribe now. In today's video, Michael Saylor is the co-founder, former CEO, and executive chairman of MicroStrategy, a company that provides business intelligence, mobile software, and cloud-based services. MicroStrategy is the world's biggest publicly traded corporate owner of Bitcoin, with 214,246 BTC. Michael discusses why Bitcoin will never fail, how to invest in Bitcoin, and the future of cryptocurrencies. So without wasting any time, let's dive into the video.
Bitcoins, right now, there are 900 Bitcoin naturally produced every day available for sale, and the miners generally have to sell them. They have high electricity bills and high debt bills and build-outs. Around April 20th, that'll be cut in half. That's 23 million a day or 20-something million a day. That's like taking $8 billion a year of supply out of the market. It will be the most consequential halving in the history of Bitcoin, in my opinion. It will create a squeeze. It means at that point, if the natural organic demand is in excess of 25 million a day, then there is no natural seller. So it's obviously very bullish for the asset class and for Bitcoin holders. I think that by 2028 you'll be down to 225 Bitcoin a day. It'll start to become second order, and by 2032 it's a rounding error in the noise. And so Bitcoin is the first time that we actually discovered a thermodynamically sound, mathematically sound economic protocol in the history of the world. So I think we will date things before Satoshi and after Satoshi. And I think that you can't think of it as a network or as a product. You have to look at it as a protocol the human race discovered, like base 10 math's a protocol, like the metric system's a protocol, like English is a protocol. And so this is the first sound protocol, economic protocol in the history of the world. Now we finally realize why seashells and bales of tobacco and fiat currency and gold coins and silver coins and copper tokens and glass beads and the giant stone coin of the Yap people, we understand why that stuff never worked. Now you know. If you really understand Bitcoin, it's because I've got an asset where the energy has a half-life of forever, and the half-life of energy in gold is 30 years, and the half-life of your money or your energy in the dollar is 10 years, and the half-life of your energy in the bolivar is 1 year. And now once you understand that basic breakthrough, now the light bulb goes off. So I think all the smart money, all the smart people in the world that don't trust the bank, don't trust the currency, want to keep their money, they're all discovering Bitcoin.
Bitcoin starts a new week, month and quarter of 2024 with several new records. Can the bull market continue from here? BTC price action made history on March 31 as the first quarter of 2024 ended with the highest close ever seen. Old resistance is not giving up without a fight. However, a battle between buyers and sellers is keeping old all-time highs from 2021 firmly on the table. Thus, price discovery remains elusive, with Bitcoin needing a push to $74,000 to knock out the bulk of latecomers' sell-side liquidity. The stage is set for potentially volatile moves as Q2 gets underway. Adding to the mixture is the classic macroeconomic data element, with non-farm payrolls due from the United States at the end of the week. This will be preceded by fresh commentary from Jerome Powell, chair of the Federal Reserve. Last week, Bitcoin appeared to respond positively to Powell, who kept the prospect of interest rate cuts in 2024 in focus. As Bitcoin itself stays higher for longer, seasoned hodlers are increasingly taking profit, going against the influx of institutional capital from the spot exchange-traded funds (ETF). A fresh appearance from Fed Chair Powell forms one highlight of the upcoming U.S. macro week. Powell will deliver prepared remarks on April 3, joining several other senior Fed officials throughout the week. Risk assets continue to stay optimistic around long-term economic policy, with some form of interest rate cuts all but guaranteed as 2024 progresses. Last week, Powell said that even recent hot inflation reports should not form the basis for an overly hawkish stance on the economy, and that the Fed would take a more balanced approach in timing cuts. This week's data, meanwhile, centers on non-farm payrolls, a release that recently contributed to BTC price volatility, due on April 5. U.S. employment data due on Friday, and just like prior U.S. data points slashed ONC, an opportunity to pick up some cheap tokens could be ahead.
I think that there's a number of classes of sellers. The bankruptcy estates like FTX bankruptcy, Genesis bankruptcy, a lot of these people have billion-dollar positions of Bitcoin and other crypto assets, and they're not long-term investors. They're just looking to unwind and get their creditors whole or unwind the trust. So they're the big natural sellers right now.
So they were flushed out of the system?
And they're getting flushed out of the system. And then I think the miners are the persistent natural sellers. Otherwise, the volatility in the system, it comes, the primary volatility is that Bitcoin is cross-collateralized and cross-traded with the other crypto assets. It's an unregulated market, traded offshore 24/7, 365. There are many, many billions of dollars of Bitcoin held offshore. There's $400 billion of ETH in a market cap. There's $80 billion and $80 billion of Solana and BNB right now. If you had $1 billion of crypto tokens offshore, you could post it as collateral and you could do a $10 billion trade in an hour on Saturday night, unregulated, unreported. So the Wild West, the number one source of volatility, in my opinion, is unregulated offshore after-hours crypto trading. The second, the lesser source of volatility is the options and the futures and derivatives market onshore during normal trading hours in the Western world. But I think that although they are capable of face-ripping trades, the degenerates in the crypto ecosystem put them all to shame in terms of what people will do.
Does Bitcoin rally post-halving? Yes and no. It is human nature to seek out patterns. The entire world of technical analysis is built on this concept. But Bitcoin's price performance is not fundamentally linked to the halving. Or to put it more accurately, Bitcoin will not go to the moon when the next halving happens. Yet it is also true that Bitcoin's price has increased hundreds of thousands of times since accurate pricing data first emerged in the early 2010s, during which 3 halvings have occurred. Halving increases Bitcoin's scarcity, and basic economics says scarcity equals greater value. But unlike gold, another scarce commodity that Bitcoin often draws parallels with, the cryptocurrency has only been around for 15 years, not thousands. There is not enough data to make a valid post-halving price prediction, and you should beware of anyone who suggests otherwise. Furthermore, the upcoming halving is unlike previous halving events. Bitcoin is substantially more mainstream and institutionalized since the last halving in 2020. This year saw the approval of 11 spot Bitcoin exchange-traded funds offered by the likes of BlackRock, VanEck, Fidelity, WisdomTree, and other major asset managers. In a short space of time, these ETF issuers have taken hold of more than $53 billion worth of Bitcoin. That's nearly 4% of Bitcoin's entire $1.4 trillion market capitalization, going by Thursday, 28 March figures. This event has triggered a substantial rally in Bitcoin's price, even hitting an all-time high of more than $73,000 earlier in March. With Bitcoin's price so elevated, it is unclear if there is enough gas left in the bull's tanks to drive it substantially higher in the short term, halving or no halving. A halving occurs after every 210,000 block of transactions is validated. A Bitcoin block is validated approximately every 10 minutes, though it's not an exact science. Therefore, we block that Bitcoin will have precisely at the 210,000 block, but the exact time and date in the Gregorian calendar sense are more of a guess. Current estimations have the halving occurring on 19 April, and do not forget to subscribe to Bitcoin Saylor. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.